What's good, everybody? It's your boy KP, London, aka the London Session Specialist, aka the Wolf of All Street. And today we're just gonna be doing a trade breakdown on GBPUSD, and just looking at the fundamentals, like how can we use fundamentals to our advantage, right? So basically, how can we trade fundamentals, right? So yesterday we dropped a video on YouTube uh talking about CPI, explaining CPI, our thought process coming into CPI, right? And sorry. And today, it's a Thursday, the 14th of September. So today we also had fundamentals. We had the core PPI, core retail sales, PPI retail sales, unemployment claims, right? And okay, that's the dollar. We also had the euro, which is monetary policy statement, main rate, and the last one here, ECB, right? So how can we utilize all of this to our advantage, right? That's like the main thing that we're going to be talking about here. So if you really want to like understand how we use fundamentals, just please go check out the first video we did yesterday. We dropped the video based on CPI, like our thought process. But today we're just gonna be looking at what happened today and how can we utilize all of this to our advantage, right? So I'll go straight to the charts. I'll go straight to the charts. So this is the dollar index. This is the dollar index, right? So let me just go to the 1 hour time frame. Right. So yesterday we anticipated yesterday in the video we anticipated to see bullish dollar, right? Bullish dollar. We were bullish on dollar and we wanted to take out a previous weekly high. And if we go to our left there, there's a high that we're also targeting. I'm not sure if it's gonna appear because I'm on the 1 hour chart. I think I might have to go to the other higher time frames. I think, somewhere here, up here. Okay, I'm not gonna wait for it, but it's fine. I'll just do this. So yesterday we had like a bullish bias on dollar, right? We were bullish on dollar, but we wanted to see price dropping to the downside, right, during CPI. But unfortunately, what happened during CPI is that price didn't really move yesterday during CPI, right? We just hit the top, taking out previous daily highs, and then we came back inside of the range, and we just stopped inside of a block, right? So we also stated that we broke market structure and we could possibly see price going all the way up, right? But the catalyst here was just, price grabbing liquidity here and then coming back inside of the range, right? So yesterday we were anticipating CPI to be our heavy hitter for the week, meaning uh it it, it we were anticipating it to cause like the to cause this to cause the weekly expansion, right? Because at the end of the day, we are trading the weekly candlestick, right? Everything that we're going to be doing for this week exists inside of the weekly candlestick. And currently, the weekly candlestick is like this. It's like this, right? If you go to the weekly candlestick, you're going to find something like this, right? So it's very important for us to mark the opening price for the week and then understand that anything below is going to be what? It's going to be seen as a wick, right? And then anything above is going to be seen as a body, right? So we had our predetermined target up here, right, which is liquidity. So Monday we started dropping, came back inside of the range, right? Which range? Between this low and this high, right? And we went inside of the range, bouncing inside of the daily FVG. This was the daily FVG, which is a key level, as we mentioned in the previous video. So yesterday, since CPI didn't cause the main move for the week, we had to wait for today and still anticipate the same thing, right? So today we opened, dropped down, hit a key level. This is a key level on the daily time frame, which is a volume imbalance. Let me just go to the daily. Let me show you the volume imbalance. Right, so this was the volume imbalance, so which is our key level. When we opened, we dropped inside of a key level, right? So this little gap right here, Sorry. So this little gap right here is what we call a volume imbalance, right? Because yesterday we closed bullish, anticipating we're still going to the upside, and today we just opened, dropped inside of a key level, and then we pushed to the upside, right? So we tapped inside of this key level on a Monday, so meaning Monday gave us low of the week, and then Tuesday did a young, went outside of the range, and then Wednesday, we were anticipating CPI to cause the main move going all the way up, but unfortunately that didn't happen. But today, this is what we got, right? We got the move we were anticipating for the week. So I'll just drop back to the H1 time frame. I'll just drop down to the H1 time frame again and start breaking it down. So we waited to see price hitting a key level and then breaking market structure, right? Structure high, which is this, right? A swing high, right? So once we traded above the swing high, I saw this as an order block, right? So this was the order block. So if we were still in a bearish order flow, we wanted to see price rejecting this level, right? Rejecting this level, going to the downside. So let me just take a pencil. We wanted to see price rejecting this level, going to the downside, showing that this is a key level on the 1 hour time frame, right? So unfortunately, that didn't happen, right? We saw price going all the way up, taking out the buy side liquidity and then breaking market structure as well. And then we anticipated price to continue going to the upside, taking out a previous daily high, and then possibly coming inside of this FVG and then this order block to retrace and then start going to the upside. So this is what gave us our bias for the day, right? Our bias for the day. So we were bullish on dollar today, right? We were bullish on dollar today. So we got our trade on GBP. We got our trade on GBP, right? So I'm not going to talk much on this, but I'll start with the euro first. All right. So with this one as well, yesterday we anticipated to see price dropping all the way down or going up, taking out liquidity, and then dropping to the downside. But that didn't happen, right? As we said, CPI didn't really have much of an impact yesterday. So, but today we knew that we had fundamentals, so we could possibly see price dropping to the downside again. Anything above this purple line here, we seeing this as a wick on the weekly time frame. And then anything below, it's going to be seen as a body, right? And this was all the liquidity that we were targeting, right? There was too much liquidity. That's why we were anticipating CPI to drop all the way down, right? But it was, stuck in a consolidation. And then, but today price was free to move, right? But what was the catalyst? The catalyst was the news events that came out today, right? But we didn't want to focus on euro today. Why? Because euro had its own fundamentals, right? We had euro news today, so we wanted to avoid euro and rather focus on the pound because there was nothing today on pound, right? So we understood that okay, pound is the one that's gonna have like a nice move to the downside, mainly because of there is nothing on pound, right? So as mentioned again yesterday, we would have liked to see price drop all the way down, and this order block was protecting us, right? We didn't want to see price going all the way up, and then another thing that really gave us confidence was just seeing like SMT, right? Smart money technique or smart money divergence, if you want to put it that way. So this is what we got, right? So this is what we got. We had a SMT. We knew that if we still going to the upside, we're just tapping one more time inside of the order block, wait for market structure to break down, and then take price to the downside, and then go attack sell side liquidity here, right? Attack sell side liquidity, and this is what happened, right? This is what happened. So we just gonna be doing a trade breakdown plus understanding the fundamentals. So we need to understand when it comes to fundamentals that fundamentals accelerates price, right? They push price. For example, if today we didn't have any fundamentals, let's say for example, okay, not even today, let me just do this. Let's say it's a new day, price is going down, right? So price would have went down, in a nice, in a nice manner, going properly to the downside because there's no a high impact event, right? But if we're anticipating a high impact event, we're just anticipating to see something like this. Boom. Right? So that's why you get people say, I made X amount of money in 1 minute or X amount of money in seconds, right? Uh, this is why. This is the reason why. Because of today, we would be anticipating, right? High impact event, right? So high impact events don't really determine the direction, right? They just accelerate price to that direction that the market was going to take anyway, right? So that's like the key takeaway from this lesson. They do not they do not determine the direction. Price is not just gonna change direction randomly and then just go to the upside because there's fundamentals. No, fundamentals follow technicals, in my own opinion, obviously. So it's important for you to have like a uh technical analysis before fundamentals take place, right? You need to understand where is price going on a technical perspective before you could add the fundamentals to your analysis, right? Because what's going to happen is the once you have your analysis, the fundamentals are just going to accelerate price to the target that you're going to be targeting, right? So it's also ideal for us to understand the concept of liquidity, right? Because mainly because of fundamentals just attack liquidity. All they're seeking is liquidity, right? If, for example, there was liquidity up here and we were going value to the downside, during the news event, maybe price would go up, start hitting the liquidity and then dropping to the downside. Hence, we avoided euro mainly because of we understand that okay, euro has its own impact, high impact news. We could see euro value doing this and then dropping to the downside. That's why we avoided it, right? So, but this one, the dollar index made it really obvious for us, right? I'll go back to. I mean, take a look at euro. We first hit the top side and then came back to the downside. Why? Because we had euro news, right? So we had a double uh fundamentals at play. But what's the main key thing here? The direction was the direction, which is liquidity down here. Price had to drop down here, but it's possible that it went all the way up first and then dropping to the downside, right? But what really kept us thinking that we're just gonna get one directional news event, not a double, was because of what happened in here, right? So before 2:30, we already broken market structure and we had this key level down here, right? So we kind of like knew that maybe it's gonna open, hit the key level, and then go all the way up, or it's just gonna shoot all the way up straight, right? And if we are to trade any of the pay between fiber and cable will be the best one, right? Cable will be the best one, and I'll just go back to cable, right? Cable being the best one. So in terms of breaking it down, we just had the Asian range, right? Which had a small range. Price went up, took out the Asian high, right? Took out the Asian high, which is buy side liquidity. So we took out buy side liquidity and then price started dropping to the downside, right? Breaking market structure here. And I'll just mark it here as well. So we just broke market structure high, right? And then we came back to this order block. You can see there's an order block, or you can see there's a breaker block here, or we filled in an imbalance, right? So if you understand ICT, you'd understand why we took this trade here, right? So we took this trade anticipating a downwards movement, and this was actually during the London session, right? That's another reason why I'm the London session specialist. I'm really doing too much with this London session thing, right? So we got our trade during the London session, and then price started moving to the downside. And then when New York came in, it just pushed price to the downside because price was going down anyway, right? So what we normally do is we wait to see, or we wait for a day where price is is like looking to trade in one direction, right? When we're doing our analysis, we should have like an obvious one direction, bias. We shouldn't be able to come up with an analysis going in the opposite direction, right? If we're saying we're selling today, price should be obvious, right? Anything that we're analyzing, anything that we're touching, even on the lower time frame, it should agree with what we say, right? So again, if you are in line with uh the daily candlestick, if you're in line with the daily candlestick, any approach is going to work, right? Whether you're using a trend line, you say your trend line broke here, you can, sell the retest. Or if you say your trend line is doing a third touch here, you can do that. It works, right? But I feel like the missing piece is understanding what the candlesticks are trying to say to you, right? The story that they trying to tell you. So yeah, key takeaway from this video is, always match your technicals with the fundamentals, understand where the fundamentals are coming in, and then have your technicals in ready, and then just use the two to get to that target level. So right now I'm just gonna show you guys the trade that we took. Let me just do this. I'm not sure